Ladies and gentlemen, good day and welcome to the Action Construction Equipment Limited Q2FY25 earnings conference call hosted by Nuvama Wealth Management. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raghunandan from Nuvama Wealth Management. Thank you, and over to you, sir.
Thank you, Neha. Ladies and gentlemen, good afternoon. On behalf of Nuvama Wealth Management, we are pleased to invite you to the Q2 FY25 earnings call of Action Construction Equipment. We thank the management for giving us the opportunity. From the management team, we have Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, Chief Financial Officer, and Mr. Vyom Agarwal, President, who will represent the company. We will begin with brief opening remarks from the management, and then we can move on to the question-answer session. Over to you, sir.
Yeah, good afternoon. Good afternoon and welcome everyone to this earnings conference call for discussing the results for the quarter and half year ended September 30th, 2024. Along with me in today's earnings con call, we have our CFO, Mr. Rajan Luthra, and our President and Head of Investor Relations, Mr. Vyom Agarwal. I hope all of you have had an opportunity to look at the company's financial statements and the earnings presentation, which have been circulated and uploaded at the stock exchanges. The company sustained its growth momentum, and it gives me immense pleasure to inform you that this has been yet another quarter of strong performance by our company, wherein we have been able to increase our top line with expanded margin profiles. In the backdrop of challenging environment, we were able to record our best ever quarter two performance in terms of revenues and best ever margin profile and profits. By balancing growth initiatives with prudent financial practices, we have been able to deliver strong returns while continuing to invest in capacity expansions with cutting-edge technologies. In the quarter gone by, we have improved our working capital efficiency and further fortified our balance sheet, which gives us the flexibility to seize growth opportunities in the future. To brief you on the standalone financial performance of second quarter FY25, the operational revenues grew by 12.2% on a year-on-year basis to rupees 754.34 crores with an EBITDA margin of 18.04%. The EBITDA during the quarter expanded by 268 basis points and increased to rupees 142 crores in comparison to 105 crores on a yearly basis, which is a growth of 34.47%. The PBT expanded by 199 basis points to rupees 126 crores, and the PAT expanded by 127 basis points to rupees 94 crores on a year-on-year basis. The PBT and PAT margins stood at 16 and 11.97% respectively. On a sequential basis, the operational revenue was more or less in line with our estimates, with a 2.82% growth, and the company was able to grow its EBITDA by 13.3%, PBT by 13.32%, and PAT by 12.73% as compared to quarter one FY25, with margin expansion of around 150 basis points during the quarter. The company has achieved its highest ever EBITDA, PBT, and PAT margins for the quarter, owing to sustained focus on cost efficiency, and customer-centric approach. In the quarter gone by, we sustained our growth momentum across all operating segments. The contribution of cranes, material handling, and construction equipment segment stood at 92% of our total revenue, and we reiterated our market dominant position while registering consolidated revenue of 693 crores as compared to 612 crores in quarter two FY24, which is a growth of 13.11%. The company recorded sales of 2,863 units in the quarter, which is up by 9% year-on-year. The profits also increased to 127 crores with a 91 crores, thereby registering a growth of 39.77% on a year-on-year basis. The revenue contribution of agri stood at 8% and we registered a revenue of 61.27 crores with a margin of 3.85%. Further, for the first half of FY25, on a half-yearly basis, we've been able to grow our operational revenues by 12.5% to rupees 1,488 crores. On a half-yearly basis, EBITDA grew by 37.72% to rupees 267 crores, and PBT grew 27.9% and PAT grew 26.32% to rupees 237 crores and rupees 178 crores respectively. 3 years back, we had set ourselves a challenging goal of delivering sustained profitable growth, and it gives me immense pleasure to inform you that for first half of FY25, the margin profile of the company stood at 7.28% EBITDA, 15.34% PBT, and 11.49% PAT, which is the highest ever in our history. Our consistent strong performance is reflective of our strategic clarity, strength of our brand, capability of our team, and the agility to run the business. We have a clear and compelling strategy, and with our positioning in infra, manufacturing, logistics, and agri sectors, underpinned by strong operational excellence and our distinctive capabilities, we will continue to drive growth and build on a purpose-led, future-fit organization. In the last quarter, the company strengthened its presence in the defense sector by securing prestigious orders to supply custom-built forklifts to the Indian Armed Forces. Further, we are on track to receive our largest ever single order, valued at over 400 crores from the Ministry of Defence. This milestone will drive defense segment's revenue contribution beyond 5% for the years FY26 and 27, aligning with our medium to long-term goal of achieving 5 to 10% share of overall revenue from the defense sector. Looking ahead, India remains as one of the fastest growing economy and its prospects remain very strong for the period ahead. The FY25 Union Budget raised capital expenditure to INR 11.11 lakh crores, marking a 17% increase from FY24 estimates of INR 9.5 lakh crores. This capex amount constitutes 3.4% of India's GDP for FY25, reinforcing the government's commitment to infrastructure development and growth-oriented spending, having a multiplier effect on the economy. The budget allocation focuses on critical infrastructure sectors with roads and railways receiving significant portions. The road sector was allocated 2.78 lakh crores and the railways was allocated 2.52 lakh crores. This allocation emphasizes the government's strategy to bolster connectivity and logistics, which is critical for sustaining long-term economic growth and supporting the Viksit Bharat vision for 2047. The manufacturing sector has also been recognized as a critical driver for sustainable economic growth, especially as India works towards becoming a global manufacturing hub. The infrastructure and manufacturing focus of the government bodes well for our company and sustained demand of cranes, metal handling and construction equipment. The company currently has a revenue capacity of around 4,500 crores, which is set to increase by an additional rupees 600 crores through the ongoing capacity expansion, bringing the total to over 5,100 crores by Q4 of current financial year. With this enhanced capacity, the company remains optimistic about the medium to long-term prospects and remains focused to deliver on its sustainable growth agenda. Going forward, we would like to reiterate our earlier guidance of 15% plus growth in cranes, metal handling and construction equipment segment for the current year and expect agri segment to grow 10 to 15% during the year. On the whole, we are looking at a growth of around 15% plus with stability in EBITDA margins at current levels. In the medium to long term, we are optimistic about the prospects of the company and believe that our building blocks are firmly in place for sustainable growth with a healthy margin profile going ahead. With this, I would like to open the call for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aman Soni from Invest Analyticals Advisory LLP. Please go ahead.
Hi. Congrats for a decent set of numbers despite extended monsoon. Sir, my first question is on the agri segment. In last quarter, we talked about due to extended monsoons, this quarter should be good for agri segment, and we grew Q1Q basis. But if we see Y-on-Y basis, the volume numbers have decreased from 818 to 724 this quarter. So could you please help us to understand the reasons behind the same?
Yeah, will you take that question? Vyom, you're taking that question?
Yeah, hi. Good afternoon, Aman. Aman, as we compare on quarter to quarter, sequentially, our agri numbers have, the revenue of the agri has increased by 42% as compared to June quarter ending and September, if we compare that. And when you compare with H1 of last year and with respect to the half-yearly numbers this year, last year there was a big export order from an African country which we were executing in the first year. And because of the global headwinds, some export order has been deferred to the second half of this financial year. So I'm very confident that we'll catch up with that number. And on the whole, for the year, we are projecting a growth of around 10 to 15% for the agri segment when it comes to the overall revenue. Yeah, the numbers might see, the volume numbers are seeing a little bit of a dip year on year. That is because one of the segments of rotavators that we have discontinued from last year to this year. So this year we do not count any rotavators in our agri sales. A little bit of an impact is because of that.
Understood, sir. Secondly, on our guidance, like in last quarter, we were talking about 15 to 20% range, but now sir has mentioned like 15% plus. So despite tough first half, we delivered a growth of around 12.5%, and second half is expected to be good as far as the construction industry is concerned. So why we are talking about 15% plus? Why we are not talking about like upper side of the guidance that we have earlier given?
Our guidance last year in the last quarter was 15 to 20%, and I believe it is still similar. That's why we are saying 15% plus. Because unfortunately, we were expecting the momentum to pick up post 15th August in the last quarter because the rains also started to subside, but it kept on raining. And obviously the election results, the outcome was not as positive as was expected. So we are just planning for a contingency. We are very hopeful of doing 15% plus, and there is an easy chance it can reach up to 20%. But to be on the conservative side, we are saying 15% plus.
Got it, sir. And sir, lastly, if you see CFO EBITDA ratio for first half, this is merely at 8%, majorly due to some current liabilities. So can you tell us what is the reason for those liabilities getting repaid quickly and CFO EBITDA ratio is getting down?
You will have to take that question.
Yeah, basically, typically the liability is basically the payments to MSME vendors. So we have been preponing our payments to MSME vendor, which has reduced the liabilities, which is a part of the current liabilities. Going forward, we expect that probably by the year end, probably the numbers will be as similar to what we did for March 24. So it is only a temporary phenomena to support our vendors to all those things. But going forward, I think we will be having the same numbers.
Understood, sir. That is from my side, sir. All the best for the future.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Akshay from CD Integrated Services Limited. Please go ahead.
Hello, sir. Am I audible?
Yeah, you're audible.
Congratulations on the good set of numbers, sir. Sir, my question is, what is our competitive edge in the construction equipment segment, like in cranes, tower cranes, mobile cranes, and all these things? Apart from the other players, domestically, I think domestically there is not much competition. There are very few players, but internationally, China's dominance is very strong in this sector. So, how do we see our competition, and what is our competitive edge, be it whether it is the quality or the spare part availability or the price? What is our competitive edge? And the follow-up question on that would be, we have consistently seen our EBITDA margin increase for the last 10 years from 3 to 5% operating the EBITDA margin to currently 13 to 15%. So going ahead in the 2-3 years down the line, where do we see our EBITDA margin?
Okay, the first part of your question. Rather, I will start with the second part of your question. See, our competition for all the products we do, different types of cranes, whether it is pick and carry cranes or tower cranes or crawler cranes or truck cranes or lorry loader cranes or construction equipment of different type, whether it is a backhoe or a road machinery or a forklift. Our competition is mixed. Indian companies as well as international companies which are operating in India. And obviously some very few international companies which are importing and selling. So most of these international companies are manufacturing in India, and that is where our competition lies. And our key strength, ever since we started this company about 29-30 years back, has been to focus on the right product, right specifications, good reliability, good performance, better than competition wherever possible, which is one of our strengths, coupled with a very cost-effective value for money proposition of price for the customer, because India remains a price-sensitive market. Now it is becoming a feature-sensitive market also, so we are trying to provide those enhanced features even at a better price. And finally, it's a machine, so you need service, spares, product support, and anybody who's able to give a turnaround time of less than 24 hours or ensure that the machine is up and running as soon as possible if there is any breakdown or any issue which is reported. So I believe that we are doing all the three things right, whether it is with the product, offering the right product, offering it at the right price, which is cost effective, and good support. And that has been the reason that over the years, we have, I would say, nearly 20 years now, we have been the market leaders in crane. And we are very hopeful to grow our market share in the current year by at least 1.5%, if not more. And going forward, we target to reach even crane segment up to 70% market share with pick and carry. And I'm sure we'll do it. It'll take more effort, it'll take more energy, but I'm sure it's possible. And the second part of the question was with EBITDA margins. Yes, we were struggling 10 years back with our EBITDA margins because the markets before 2014 had become very slow, and then gradually our margins started to improve with operating leverage and utilizations increasing, which continues to happen even today. So with the further operating leverage kicking in, there is definitely more scope of improving our margins further. But then I think as a company we have to make a choice whether to remain competitive or cost effective in the market or continue to keep on increasing prices. So that call we will be taking over the next, I would say, 2-3 quarters. That maybe we will whatever is the operating leverage benefit, we start passing it out to our customers and not increase our prices further. We have not decided on it so far, but I think by the end of this year or in the first half of next year, we'll have to take a conscious call in that direction.
Okay, sir. Okay, very good explanation on that. And sir, my second question is about the joint venture with the Kato Works. So, what is the development on that front, and which type of product segment we are targeting on that?
Yes, Kato is one of the big Japanese manufacturers for cranes. It is more than 100-year-old company. And we are tying up with them in a joint venture to manufacture bigger capacity cranes, especially crawler cranes, truck cranes, and rough terrain cranes. And it is, in principle, we have already informed about our arrangement that we are in the process of setting up a joint venture. So definitive agreements are being negotiated currently, and we are hopeful that by early Q4, all this process would be finished, and we would be setting up a joint venture maybe within Q4 itself or early next financial year in Q1 FY26. And we intend to start producing machines within 6 to 8 months of that. So we will have some revenue from the joint venture in FY26, and it will start to go full steam in FY27. That is the plan as of now.
Okay, sir. And at the end of the FY25, our capacity would be around 5,100 crore revenue. So any further plans on capex on the end FY25?
See, our capacity will be 5,100 crores. In saying this, I would like to add that with a very nominal capex, this can further be increased by 600 crores. So I think which we will not exercise in the current year, but if it appears so, maybe in quarter 4 of this year or quarter 1 of next year, we will think of doing that, further enhancing it by another 500-600 crores. But as of now, yes, our capacity is 5,100 crores.
Okay, sir. Thank you, sir. Thanks for the answer.
Thank you. The next question is from the line of Saurav Kataria from Max Life Insurance. Please go ahead.
Hi, good evening, sir. Just wanted to, part of the question, I think part of the answer you already gave in the previous question, but in the margins that we are seeing in the current quarter, is there a mix angle as well? Is there an element of higher value cranes also coming in which are driving the margins higher, and therefore sustainability is also going to be higher? And second part is also as regards, you mentioned that 600 crores additional to the 600 crores that you mentioned initially. So 5,800 can be done with minimal capex. And post that, if any, what is the, do we have land, etc., in the current site, or do we have to look for that? If you could sort of guide us on that as well.
Yeah. So first part of your question regarding, definitely there is an angle of product mix which has, added to our EBITDA margins in the last quarter. And going forward, this product mix benefit will be there because higher tonnages crane, even in the pick and carry segment within this segment, are gaining more traction. And apart from that, another contributor to our good performance with respect to profitability was, I would say that the commodity prices, especially steel, were a little off. And we were able to benefit from that, which is still continuing in the current quarter. But I think post-Diwali, there has been some strengthening of prices. But I'm sure we'll be able to manage that with our upcoming price increase, which is due on 1st of January. So product mix did add, commodity prices softening, especially with respect to steel, did help us do a good profitability. And the second part of your question, 600 crores will become operational in quarter 4. And with nominal capex, this can be increased by an additional 600 crores to reach 5,700 crores. You've understood it right. And thirdly, with respect to land, at our existing main facility, which is close to about 100 acres. So after these expansions, there will be a scope of, constructing more, but to a limit of maybe 500 to 1,000 crores more. So let's say from our existing piece of land, at best we will be able to go to close to maybe around 6,500 crores plus minus. But additionally, we have acquired, because looking at the growth potential and the prices of lands were going up very fast. So we have already done agreements for about 82 acres of land. These are two different chunks. One is about, I think, 21 acres, other is about 61 acres. So the 21 acres has already been registered in the company's name, and we have possession of that land. The balance 61 acres chunk, hopefully we should be in a position to bring it onto the books of the company and take physical possession in quarter 4. So this land would be for future growth of the company, and they are very close to our existing premises. The smaller piece is all of 5-7 minutes away, and the bigger piece is about 30-35 minutes away from our main premises. Apart from that, we have also applied for another 48 acres of land with the government in a different state. We want it to be more centrally located going forward with respect to our exports and to further improve our logistics costs for the supply to South India and East India. So maybe, and that's the reason we've also asked for another chunk of about 48 acres of land, which we've applied for. And we are very hopeful it will go through. It has been recommended. So that is with respect to lands for future planning. And this land which I'm talking about all put together 61 acres and 21 acres and the 48 acres would actually be more than what we are currently using.
Got it, sir.
I hope that answers your question.
Yes, it does. Thank you. And best of luck for the future.
Thank you.
Thank you. The next question is from the line of Mudit from IIFL Securities Limited. Please go ahead.
Sir, regarding your margin expansion, so you mentioned firstly product mix and the commodity prices. So it is possible to quantify which is the major factor, either in percentage term or anything, because gross margins itself has increased, whatever the EBITDA margin has increased. And secondly, is there any specific reason for short-term borrowings increase to see from FY24 to this half year?
Yeah, see, I think the margin expansion could be equally attributed to both the factors, the product mix as well as the commodity benefit which we got. And the short-term borrowings, I think, Luthra Saab, you'll be in a better position, but still I'll give you a flavor. It has more to do with that, again, the MSME payments, which as per the new norms we have brought to par. And generally, our creditors have been reduced by about 5-7 days in the last 1 or 2 quarters. So that is the reason, but the short-term borrowings again will bring back to, nominal or nil level by end of March. Luthra Saab, you want to add anything there?
I think you have got all the points. Besides that, we have made some payment for the land also, advance payments to the land you referred to.
So it's a mix, but this is, I think, again, by end of Q4, I think we would again be back to square one. In any case, we are into negative debt territory. We have, I think, investments and cash to the tune of 700 to 800 crores available on our books.
Yeah, we have got investment of 785 crores and a debt of 114, so net of 610.
So we still have net investments and cash of 610 crores.
That's right.
Okay, got it, sir. And just a follow-up to that, the higher product mix, the favorable product mix that you said, that is entirely because of the higher tonnage crane, right?
No, again, see, it is a mix. It is not only the higher tonnage crane, but some of our NX series cranes which we had introduced 3-4 years back. But obviously they were priced a little higher. They were multi-activity cranes. And after Corona, around the time, people were a little hesitant in adopting technology at a higher cost, which has started happening now. So it is attributable to the the tonnage mix, obviously, which is shifting as a cycle. It keeps on happening every 5 years, 7 years, and now it is happening 20 tons and above category. And apart from that, also you can attribute some part of it, not I would say a major part of it, to adoption of multi-activity cranes, which our company had introduced 3-4 years back. And I'm very happy to tell you that we have patents on these cranes, so nobody can basically copy them or introduce them.
Okay, got it, sir. Thank you.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aditya Kumar from Old Bridge Asset Management. Please go ahead.
Hello.
Yeah, hi.
Hello. Thank you for the opportunity, sir, and congratulations on a very healthy set of numbers. So my question is on the volumes front first. So this, especially on the cranes, construction equipment, and material handling segment that has been consolidated. So there in that segment, we have seen close to 9% volume growth. So can you just elaborate, like which of the main categories have contributed to that 9% growth, and how has the cranes segment specially performed here?
Yeah, I think the main contribution has come from forklifts, cranes, and I think last quarter the construction equipment was more or less flattish, because construction equipment is primarily used only in infra or construction activity. that is the backhoe loaders and rollers, and that activity was suffering quite a lot because of rainfall of last quarter. So I would say most of the contribution in growth has come from cranes and forklifts. Right, Luthra sir?
That's right, sir.
Yeah.
Okay. So if I look at the overall industry and the competition, so this quarter, the industry and the competition has, if I'm correct, has degrown a bit in the crane segment. But if your crane segment volume has grown, then how would your market share would be currently in the pick and carry cranes?
Yeah, I'm sure our market share would have been affected positively. And I did mention, I think in one of the answers before this, that we are very hopeful that in this year we should be able to increase our market share both in tower cranes as well as pick and carry cranes by at least 1 or 2 percent points, which would be only clear by end of the year. Because last year we were struggling on account of capacities, and especially in the first half of last year, we were losing orders on account of delivery not available with our company. And the situation got rectified only end of Q3, Q4 last year. So our capacities are in place. By Q4 will be further expanded. So we are very hopeful that there will be a positive impact on our market share by end of this year, both in pick and carry as well as tower cranes.
Any sense on market share number, specific number? What would be the current market share number we will be having on the pick and carry side? Like you mentioned, like 63% market share in the presentation. So is it the similar number, or has it increased?
I think it's dynamic. Monthly, quarterly, it keeps on shifting between 62, 64. To be very frank, so on an average, by the end of the year, it turns out to 63. 1.5% increase is possible within this year. So it could go to 64, 65%. That is what is possible, and it seems balance, we'll have to achieve it to, confirm it.
Any specific target market share you are having for this segment in the future?
We want to be 70% in pick and carry cranes.
Okay. And sir, on the construction equipment side, backhoe loaders, so for last 2 years, the performance has significantly improved on this side, on the backhoe loader side. So what would be, and you guided like you would be increasing the market share significantly from here on, like you were having like 1 or 2% market share, and you would be increasing. So what would be the current market share in the backhoe loader segment?
Market share is still similar, around 2.5%. And to be very frank with you, in the last quarter we have not done good numbers in backhoe loaders, primarily because of 2 aspects. Infra activity was very low because of excessive rain, which continued well into September, and also because our exports of this product, the construction equipment segment products, were a little affected. So we will do a catch-up in second half of this year with respect to construction equipment. And we would, generally we were expecting a higher rate of growth for construction equipment, maybe 30 to 50%, 40%. But this year might be a little sideways with respect to construction equipment, maybe only at 10-15%, which time will tell once we finish Q3 and Q4.
Okay.
But it is probably due to weak performance, which we were not able to do in the first half of this year.
Okay, sir. Thank you for that.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of CA Garvit Goyal from Invest Analyticals Advisory LLP. Please go ahead.
Hi, am I audible?
Yeah, you're audible.
Good evening, sir. Congrats for a decent set of numbers. Sir, like you mentioned, we will be having capacity of INR 5100 CR by the end of this financial year. My question is like, how the ramp-up will happen? Like, with this kind of capacity at the beginning of FY26, how do you look at FY26 and FY27 in the terms of execution or ramping up this total capacity?
Last year, as I was just mentioning, we suffered on account of capacity not being available, and we lost on the opportunity of increasing our market share in our core products in FY24. So keeping that in mind, we had increased our capacity. And within the current year, we had further planned to increase our capacity, which is already underway. So I believe that in future, whenever we are touching about 80% of our capacity, will be our normal norm that we will try and increase some capacity so that we are not taken aback. And luckily, our country is growing fast, and the government has big plans. Already 11 lakh crores in the current year budget, which is 3 times of what it used to be 5-7 years back, with respect to capex. And going forward, we believe and understand that by 2030, this 11 lakh crores would be looking more like 22 lakh crores into capex by government. So we do not want to, lose out at any stage with respect to the capacity that we have, and that is the reason why we were building it. Yes, this year has been slightly slower as compared to what we would have planned. But it was evident that first half will be slow, mainly because of elections and obviously monsoons. And second half has already started picking up, and about 55% of our revenue generally comes in the second half. So looking at all that, I think this year, if we do a 15-20% growth, so that will be somewhere 3,400 crores plus minus. It could be 100-200 crores on either side. I would feel the positive side. And hopefully we should be getting closer to our capacity that we have created within FY26. Because in any case, we had committed or we had planned that between FY23 to FY26, we will triple our revenue. So from 2,200 crores, in any case, we have to somehow try and achieve 4,400 crores by FY26.
Understood, sir. Like at the beginning of, I think, FY24 also, we were kind of expecting a growth of 25% CAGR for next 3 years, right? So is that target intact?
The first is FY23 to FY26, then is FY24 to FY27. I feel currently we are focused on FY22 to FY23 to FY26, 2,200 crores to 4,400 crores. God willing, if things start to shape up and this whatever 3-4 months of tepid growth or which has happened post elections, because the sentiment has got affected a little, I'm sure everything will catch up in the next 3-4-5 months and things will again start to roll in FY26. So we will try to achieve both, but the first one seems more doable.
Got it, sir. And sir, in other income, like in last quarter also you mentioned there is some rental income. So is it like we are renting the cranes, or what is this rental income?
I think within Action Construction Equipment Limited, we have some crawler cranes which are on rental. Luthra sir, if you can elaborate this.
That's right, sir. We have very small numbers of cranes which is given on rent. So that is what that, as we are not competing with our customers, therefore we don't go on rent, but don't give our products on rent, but because some of the OEMs want us to want to deal directly on some of the machines, we give it. So the revenue is very small. If I look at the revenue for the rental income will be as low as 8 to 9 crores rupees, that's all.
Understood, sir. And sir, you mentioned in your opening remarks about the defense order, single largest defense order that you are expecting. So how much time would it take? Like, can we expect in this quarter only?
Yes, I think the indication that we have, it is already in the draft stage. And we should, if everything goes well, we should be receiving the order within November. It is a 400 crore plus, close to about 420 crores order. It is our single largest order. And also obviously the largest order we've ever received from the Army. Apart from that, we are also expecting another 20-25 crores order within November from the Army for a different type of product. So, but yes, this 400 crores order, we will have close to 3 years to execute it, but we want to execute it within FY26 and FY27 in the next 2 years. So 200 crores additional revenue addition is easily possible on this account from defense, which will take defense business contribution in our overall revenue to more than 5%, maybe close to 6-7% in both the years.
Understood. And it must be based on the tenders, right? So what kind of margins we can expect here?
The margins are more or less in sync with the company's margins. And because obviously we cannot be overcharging anything, and we are definitely a very patriotic type of company. So it is in sync with the company margins.
Got it. And lastly, on the electric cranes, like what are the update on that? Like by when are we looking to launch that product or scaling up the product?
The product is already available. The only thing, the regulations are missing. So again, it is expected that within November or latest by December, the notification which has come with respect to CMVR regulations for this electric construction equipment should get notified, and we can sell it and get it registered. The customers can buy and get the machines registered, which is a norm. So I think ramping up will start maybe second half of December or maybe within January definitely, and the electric cranes will start to gain more traction.
And that's it from my side, sir. All the best for the future. Hope you will deliver for what you are known for. Thank you very much, sir.
Thank you. We will also try our level best. That's why somebody was asking 15% or 20%. It's better to be cautious than to be over bullish. So if this year has been slow, so there is no harm in accepting it is slow. But like I said, second half is 55% of our revenue, and in good years it can also go beyond 55. So let us hope a miracle happens in the second half.
Thank you. Before we take our next question, a gentle reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Nirav Vasa from Portfolio Managers. Please go ahead.
Hello, sir. This is Nirav here from ASK Investment Managers. Sir, I have a couple of questions. The first question is pertaining to increase in cost of engines. So basically what we have seen is that there has been rating change and there has been significant increase in the cost of power gens. So I wanted to check, us engine being a critical component, what has been the increase in our costs for that part?
See, I'll tell you, Nirav, with respect to power generation or gensets, there have been regulations which have come in, and I think they are now controlled by CPCB 4, if I'm not wrong.
Yes.
We are not in the power generation segment or gensets, but I think it is CPCB 4. Similarly, our equipment, they are regulated by CMVR, Central Motor Vehicle Rules, under the CEV category, Construction Equipment Vehicle category. And engines less than 50 horsepower are at BS3 level, emission Euro 3 you can say, or BS3. And engines bigger than 50 horsepower are currently at BS4. On 1st January, there is a transition. BS3 engines are going directly to BS5, and BS4 engines are going to BS5. And yes, there is going to be a cost increase. The last cost increase was in, I think, September, October 21, when some engines went from BS3 to BS4. But now all engines are going to BS5 emission norms, which will put us at par with the European norms, better than Japanese and American, because they are still at BS4 or Euro 4. We'll be at stage 5. And there is a significant increase for the engines which are going from BS3 to BS5. So the cost of the machine can go up anywhere between, I would say, 11 to 15%. Average we calculated will be around 12%. The machines which are going from BS4 to BS5, there will be a cost impact of 5 to 6%. So from 1st January onwards, I'll just repeat again. Engines going from BS3 to BS5, there will be a cost impact of around 12% average. Machines going from BS4 to BS5 from 1st January onwards, there will be 5 to 6% increase.
And
6% of our machines are going from BS3 to BS5.
Got it. And sir, because of this price hike, which I believe most of your customers must be knowing, are we sensing any pre-buy to happen, or maybe has there a scenario wherein a customer has given you some kind of advance and booked the equipment and has asked for the delivery to be done at a later stage?
It has already started happening post-Diwali. Till 4th there were holidays. It has already started happening. The number of orders and inquiries have started increasing. And I think in this week itself, we are going to be releasing our new price list, which will become effective from 1st of January, which will give a very clear and realistic indication to customers. And we have told all our salespeople to inform all the buyers who are waiting for buying machines over the next 2-3 months that their cost is going to go up by 5-6% to up to 12%. So in case they want to save on it, they can pre-buy. So we are hopeful that we can expect a 15-20% additional sales on this account. Balance time will tell. Man proposes, God disposes. We are ready with our inventory. We are ready with our planning.
So effectively, if a customer gives you an advance in December and tells you that machinery needs to be delivered in February, is that possible?
Technically, if it is possible, if we have stock available and that stock is uploaded on Vahan, so I'm sure there will be some carryover stock. Some customers might be able to do it, but any order for delivery which we want to take in January or February will be subject to availability.
Got it.
So if we are sold out within December for a particular model, then we cannot. So the best bet for any customer would be to take delivery before 31st of December.
Got it, sir. And sir, with regards to procurement of engines, like are our engine suppliers ready with the stricter compliance engines, or how is it? Because they also have to do a lot of testing and compliance from government to get themselves certified.
Yes, it is not only the engine. With those modified engines, let's say upgraded engines from BS3 to BS5 or BS4 to BS5, even we have to make machines and get our machines CMVR approved from ARAI or ICAT, just like automobiles or commercial vehicles. Mm-hmm. This process has been going on for the last 2.5 years in our engineering and R&D. And obviously with the engine guys. So all our protos, I would say most of our models have already received ARI approval. There are some pending which we are expecting within November. Rather, within the month of January, we are making some pilot lots of most of the models. And same will happen again in December to, do away with any supply chain issue with respect to regular production when it comes on from January.
Correct. And sir, effective with the start of calendar year 2025, when we will have probably the strictest emission norm compliance. How big can be the export market? Yeah. How can be the export market for us?
Yeah, see, I'll tell you two things. The BS5 standard, similar to Euro 5, the Indian BS5 is even more stricter than the European. Because unfortunately, our government has picked out the most stringent norms and put it in our BS5 for construction equipment. So our norms are a notch above BS5 of Europe, and when we have to go to BS6, it is going to be very, very easy. Because actually most of the things are qualifying for BS6, to be very frank with you. First thing. Yes, definitely. This Tier 5 or Tier 4 is in Americas rather, and Europe and Japan and some other developed countries, which have not been our target markets in the past. But going forward in the next 2 years, 3 years, even these markets, once we have totally adapted to the technology and perfected it, I am sure these things will also come into our scheme of things, the developed markets, with respect to export of our cranes or construction equipment. And we are very seriously looking at it. And in the same breath, what we are also doing is, the whole of this year and going into the next 6 months of the next year, we are working on upgrading the aesthetics and the look and feel of our machines, most of our models, to meet international standards like the machines the way they are in Europe or in America. So that exercise will also get captured. So hopefully in 1 or 2 years from now, we will also try and go into the developed part of the world with our machines.
Got it. And sir, with regards to the JV that we are intending to do with a Japanese partner, the scope and nature of the work would be like, if you can elaborate a bit more, would that be restricted to contract manufacturing, or how would that scope of work be?
I have understood your question and I will answer it. It is not contract manufacturing. This is a 50-50 JV between ACE and Kato of Japan. This would be a manufacturing JV. So this JV will be manufacturing machines with technology from ACE as well as Kato. Kato will work on ACE technology machines to upgrade them at their R&D in Japan. And so the machines would be upgraded machines in sync with international standard and performance. And this is a manufacturing JV. So this is the first type of machine which will be made, which are upgraded ACE machines with Kato technology. Second type of machines would be machines with Kato technology, which are totally similar to what Kato is doing in Japan. So the machines to be made with ACE and Kato technology will be sold by ACE in India with our current network or enhanced networks. And the machines which are made totally on Kato design will be sold by Kato internationally. And if there is any market for those models within the country, ACE will be doing it.
Got it. And sir, my final question is pertaining to the O&M revenues. I understand these are very, very mission critical equipments. What kind of potential do you see in the operations and maintenance part, and how big can this piece of revenue be for you?
I think, Luthra sir, our spare parts revenue is close to about 50-60 crores. Luthra sir?
It is around 4% of our total turnover.
4% of our turnover. So, I've understood the question. I answered it in two parts. We realize that the sales of our spare parts is reasonably under-penetrated in the market, because over the years a lot of spurious players and alternate parts have come up. So we are working very strictly there so that our spare parts sales or spare parts contribution to our total sales revenue increases, and our target is to increase it by 50 to 100% from what it is currently. I think it is possible. This is one part of the question. And for this, we have come out with our DMS and a lot of other things. The service app is under planning so that the customer does not go out of the fold of our network with respect to service and parts. Secondly, most of the O&M revenue, I would say, not O&M, we are not into O&M, we don't operate the machine. But most of the maintenance revenue goes to our dealerships, except for products like tower cranes or the bigger crawler cranes, which are sophisticated pieces of technology, and we handle it directly, not through dealerships. There again, there is a scope of increasing that.
Got it. Thank you very much, sir. My queries have been answered.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Pawan Vanukuri, an individual investor. Please go ahead.
Hello, sir. Good evening. I think I'm audible.
Yeah, you're audible. Yeah.
Okay. This is regarding the acquisition which you have mentioned in the previous conference call. So in Q2 or Q3, we were expecting an acquisition to happen outside India, right? So is it still in plan, or are we still working on that, or can you give some update on that, please?
We were very aggressively working on some acquisition plans outside India to increase our product portfolio and to also increase our penetration in that market. But something more important, more interesting has come up, a better opportunity of, trying to do the same thing which we were trying to do. And so in lieu of that, that acquisition we were looking outside India has currently been put on hold till such time this opportunity is totally, understood and implemented by us. So as of now, that acquisition outside India has been put on hold, and we are working on even a better opportunity. So hopefully, if everything goes well, maybe in Q4 or Q1 next year, we might be able to announce this even a better opportunity, like I said. And I cannot disclose anything more than that at the current juncture, because these are very sensitive matters.
Yeah, sure. Is the JV with Kato Works going to help us achieve what we are trying to do instead of going with an acquisition, sir? Because Cato itself is going to support us in entering the export markets, right? So,
Cato
going into acquisition
is a separate thing. It is for bigger cranes. This acquisition was a different product category to get access to technology and to increase our presence not only in India but even in international markets. So the opportunity I'm talking about is totally different. And hopefully, if it goes through, which it will, as it seems, this will be much bigger than whatever any one of us imagined.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to the management for closing comments.
Yeah, thank you. I think we have had a reasonable quarter amidst all the headwinds and excessive rains and the sentiment going a little lower because of the election results. But I think we've been able to pull off a reasonable job with respect to our last quarter results. And we expect that generally in sync, which I had mentioned earlier, that 55% of our revenue comes in the second half. So hopefully that will play again as it has in the last 29 years for us. And we will be able to maintain our margin profile. We will be able to increase our revenue. And with some pre-buying of BS3 and BS4 machines happening as BS5 kicks in January, that should also add to our revenue growth in quarter 3. And on a whole year basis, I think we are committed to at least a 15% plus scenario with respect to our revenue, which can reach up to 20%. That time will tell. And I think with this, I'd like to close the call and thank everybody for attending the call. Thank you.
Thank you, everybody.
Thank you all.
Thank you. On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.